Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, March 4th, 2025. Man, this market is insane. We actually traveled down, up, and down about 348 points today. So that's about 7% of a 7% move in one day, and it's getting pretty hairy. And the thing is that don't anticipate this to end. It's going to be we're going to start seeing massive moves, and it's probably going to go right through March into the beginning of April. But the thing is that, so really what my takeaway on it is that what happened to me on Friday with the Condor trades, where I got stopped out on both sides. I kind of knew it wasn't going to work. I did try one today, and it actually worked all right because I did it when we were up here, and I actually sold the 5720, 5700 puts, and then went up here and did the 5880 and the 5890. But I did bigger spreads on it, and so what it did, it gave me a $6 premium, and so I was able to put that on the back end of it, and I ended up I made like $1,000 on that trade pretty quickly, and just ended up closing it because I knew we were going to be pretty volatile, and I didn't want to get stopped out and then risk getting stopped out on the upside again. So we took some there. Then I made another this couple more small trades, but it was really the directional one, and when I'm doing a directional trade, I stay very conservative. I do like 2 contracts, if that. So it's got to move a lot. But we ended up doing 3,500 for the day, 3,510. But the thing is that it was up to 3,800, and it could have even been more than that, because when we got down to this level, I was telling people in the room, I said, if you want to take a risk trade, I said, look long here and wait and leave some powder dry in case we get down to the 7,000 level, and then leave a little bit more in case we go down to the 56. 75, I think it was. I'm not sure. But in any case, anybody who took that trade made awesome gains on it. And I actually, once we got another trade that I had put out on it was, and this is the one that I took. Well, I'm going to go to a 5-minute chart here. So it was right here that when we made this run up here, I actually this is where I closed my one call. I did okay on that, and then it came down. And what I told people was, I said, listen, I said a break of the 58.12, you can take this trade up to the 58.35, 58.50. Went a little bit higher than that. But that was the combination on it. But the trades, even when it got up here, like I said, it could have been a very good day, because I was looking to actually sell call premium, but it was getting a little too hot right here, and I didn't feel like it. I actually did put it on, but what I did was I put because once I put it on, it started going down some, and I was up on it probably like 500, and then I just put a stop a little bit above my entry, so we would have been close to 4,000 today. I think actually 3,800, but I put the stop on. It took us out. It took me out, of course, and then went straight down. But this was the move that I was looking. Now let me show you why this made sense. So let's start with the 60-minute chart. Remember, this was the buy zone, and then we also had it right here at the 5701. So once we took this out, it was easy enough to say, all right, here's our new buy zone on it, because we opened up below that. So the buy zone was between this 5775 and the 5700. Now, here's the reason why. Let's take a look at the daily chart. And as you can see, this was one of the reasons why I was suggesting to not, in the morning notes, I said, do not short down here. You're only going to be asking for trouble. But on top of that, in the room, I was saying, if you want to take it's a little bit of a dangerous trade, because the S&P was down 120 points. I was like, these are support levels right here, and people are going to be buying. So anybody who took that trade, they only got in probably a third of a position, because it never went down to the levels that I was looking, and it popped up. But still, with this is the support level right here on the downside. So I'm thinking, nothing is going to go in a straight line. Okay, so my take is this: is that sooner rather than later, I think we are. Well, I don't think I know we're going to get some kind of bounce. It's just a matter of from where does it take place. So once we do make the low, whether it has to be at the say the 5708, or when we go to the weekly chart, you can see 5638. So this is major support right here. And once we find this, I think we're going to have a 3 to 5 day rally. That's going to be one of those bear face ripping moves, and we can see a move very similar to like what we saw here, but take us even higher, meaning that we're going to come once the low is formed. Then I can turn around and say, okay, let's put some fib retracements on it and see what that matches up with support and resistance, and then just take the trade from there. But at these things, March is going to be crazy, and we're going to get, the big moves to the downside that end up like we did on Friday. We're going to get big moves up that end down like that happened yesterday, and it's just going to be chaotic, and if you're not at your computer all the time, my suggestion would probably be just go take a break for the month of March and come back in April, because I think it's only going to get worse, especially when we get into the mid-month area. So it just has to do with some timing models that I follow, and it's been looking for this the volatility to kick in. So so anyway, when we make the low, whether it be 5,700, maybe we do have to get to the 5638. I'm anticipating from there we get a rally that's going to bring us back somewhere up into this level here, maybe even a little bit higher, and we come up. It all depends, but I do believe that 2025 is going to be a rough year. I just think that it's for a few reasons, and one is going to be people are coming to the realization that the Fed's not here to help them anymore. The market's on their own. They can try to cheer CPI numbers and all that stuff, but the Fed's not going to. I don't believe they're doing anything this year. I think they're a little scared with the tariff war that's going on right now and what that's going to do to inflation. But I just don't believe they're here to help out the market, especially when it's only down 3%. So we got to get used to this kind of move. So right now, let's take a look at the shorter term. So I want to go over this part. So when we got this bounce, it's funny. I was actually talking to my brother. He trades the spiders, and I was telling him down here because he was short. As I said, once it gets down to that 5,700, I was like, you want to switch your puts to the long side and go on calls, and he did it. And when it came up, towards the end of the day, he said that he thought the market was gonna, the S&P was, or the spiders was gonna, that the S&P was gonna end up 30 points higher, and I said it's probably gonna end up 60 points lower. And he told me he bought calls for tomorrow, and I'm like, and by the time he finished his text, the S&P was down 40, and he's like, what did I just do? But he was able to scrape the losses that he had on those calls. But the reason why I was telling him, even from here when we came down, I said you really you want to be looking up, and I say because we're going to retrace this move. It always retraces. And when it does, it typically goes anywhere from your 50 to the 62 to the 78. And this is your retracement level. If it gets above this, then we're coming up and either going to test these highs or take them out. But really, this is the line in the sand for when you have these kind of moves and there's a retracement. So if it does pop up and somehow we could see the bulls get up to the 57.23, I think it would be a blessing right up here, and that it would be a great shorting opportunity. But if we what I can see happening is we get another one of those drops, and then we see this 5,700 hold, and then they scream higher, and then they just pin that for into the week's end. And by the time that happens, we could be trading anywhere up here. And now I'm not 100% sure that is going to happen, but just know that volatility hits both ways. So don't believe that you have everything figured out, because once we got this 50% retracement, it went straight down. And when we came down here, what I was telling them, I said, because this will retrace as well, this move. And what it did after this move up, you can see that the 50%, 61, 78, 71% is when they decided to step in. So from there, we could even measure it from here and say the move could go somewhere up into the 58.13 level. And this would I don't have it mapped out right now. Let me see if I have it on the 2 minute. No, I don't. It's all messed up. But anyway, you can match these out. And what happens is let's say it gets up to 78% of this move down and then heads down, what it's basically telling you is we're in a downtrend because we're making lower highs and lower lows. So I think it's going to be one of these is going to be where we either pop up and come down and then up, but it's going to have everybody leaning on the wrong side. And then you're going to have people that are going to say, well, I'm just holding on to my shorts, and they're going to, ride it out. But when they're 250 points underwater within the S&P, you're not holding anything back. So everybody says what they're going to do, but it's a mind game, and you really do need to control your emotions on this, and it's have stops in place and expect the unexpected. So for tomorrow, I mean, the bulls are going to have to get above the 58.12. If they do that, then we can see a test of these highs again. If they start getting above these levels up here, then what happens is we could be doing an ABC move, and from there we could see the S&P trading up near that upside target that I was talking about at a 5,900, or possibly even higher than that. But right now, the bears are in control. The news out there is not bull friendly. But as I mentioned in the morning notes, the problem with getting ultra bearish on this market with the tariff news is they can end in 1 minute. And as I said, Trump is one of the most pro-market presidents in history that we've had. He doesn't like to see the market go down, and he may turn around and to try to save it, say, hey, I'm going to pause the tariffs. We want to talk for 30 minutes. Let's cool the jets down. And from there, you can see the S&P up 250 points in one day. So leaning extra bearish just on this kind of stuff that can change in a second, I think is a dangerous game. So you want to be looking both ways. You want to be, just ready to be able to switch hats and not have to think about, the market's going to come back down or it's going to go. You just have to be ready for it and then adjust hats and then take that trade. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.